What's up, team? Hope you're all well. Welcome back to another episode of Sniper Sundays. This is a series where we go over all of my trades placed, analyse them, where the entry was, where the stop loss was, where the take profit was, follow along with the strategy, no matter if it was a win, loss, or break even, and then track week on week, month on month, the progress of the trades essentially. All of these trades are posted in the VIP group ahead of time, with exact levels for where to enter, stop loss, take profit. We've got multiple take profit areas, so I do provide a strategy for this depending on how you want to structure your own trading plan. So some trades I'll give 3 TPs, some trades I'll give 2 TPs. You can either take the full TP at TP1 or you can split it and take partials at multiple TP levels basically. I have got the track record for each different outcome. And in the past year, it would have actually been slightly more profitable to just take the full TP at TP1. And then you've also got just quick in and out trades as well. So that was kind of interesting to line up. But yeah, without further ado, let's get into the episode. This one's going to be much more different than the previous episodes. And it's going to be way more important. If you actually want to become a full-time trader, this is probably the best episode that I can have ever made to date. Reason being, the markets have been extremely tough in the past 2 weeks. And what do I mean by that? It simply means that I've just lost a lot of trades in the past 2 weeks. So it's not that the markets were tough, because I was given trade setups, they matched my trading plan, so I executed them. And for me, I'm quite numb to that now. It comes up, I analyse it, okay, that's correct, bam, okay, I enter. For me, that doesn't matter what happens thereafter, because I trust my edge. I've been doing it long enough. I know that it works long term. What's tough about market periods is when you take stop losses over and over again, or so it feels that way. The reason it's good to have your own trade journal, like I do week in, week out here, is so that you can be a little bit more emotionless to the data. So rather than reacting it with how you feel, the numbers will tell you exactly what's happening. So when I've actually tallied up this past 2 weeks of trading, it's not been anywhere near as bad as it feels mentally, and you'll see that while I'm going through the episode. If you're new to trading or you're still in your trading journey, all that matters is that you've got a trading strategy that works and delivers you an edge over the markets in the long run. What that means is that in the long term, the law of averages will make you more money than it will lose you money. In the short term, there's always going to be periods where you might make money, you might lose money, but it's the edge that matters. In the long term, so anything over 12 months is quite a short long term, in my opinion. I've seen a lot of shit strategies that can have a decent 12-month period, and they can also go on to lose it the month after. So 1 year is still quite short for an edge. You need a large sample size, but it's better than nothing, hey? How trading works is based on probabilities. It's sort of like owning a casino. That's the best analogy that I use. So when you own a casino, you know the probabilistic outcomes of all the machines and all the different games that you let the punters play on. Okay, so there might be months where people get lucky, or it's not even luck, it's just that that's how probabilities work, you know. Sometimes you win, sometimes you lose. But you'd never call a casino owner a fool or a gambler, even though he is literally in the gambling business and is relying on a wagered probabilistic outcome to pay his wages. There's going to be months where that casino owner doesn't make money, but he's absolutely fine with that because his risk management is solid, given that he knows what he's doing. And in the long run, the law of averages is literally paying his wages, and it's just easy. He just, lets the things execute. And that is exactly how I see trading, okay? So as long as you get the correct entry that meets your set trading plan, you execute it, and you don't give a fuck if it hits your stop loss or you take profit. And that's what is going to make you a good trader. Being attached to the outcome is a very unhealthy habit in trading. And it's only human. When you're starting out, it's only human. You will feel happy when you hit a TP, and you will feel sad when you hit a stop loss. But every trader has losing periods, okay? If you've got a 50% win rate, for example, easy example, half of the time you win, half the time you lose. The chance of you losing one trade is 50%. The chance of you losing 2 trades in a row is 25%. The chance of you losing 3 trades in a row is 12.5%. And it just multiplies like that. So it's 50% times 50% times 50%, etc., etc., etc. Even if you've got a 90% win rate, okay, the chance of you losing 1 trade is 10%. The chance of you losing 2 trades in a row is 1%. The chance of you losing 3 trades in a row, etc., etc. That probability, when it's a 50-50 win rate, is exactly the same outcome for if you were to, the chance of you winning 1 trade and then losing 1 trade and then winning 1 trade and then losing 1 trade, because each trade is independent of one another, okay? As long as you get that set up, I don't want to get too deep into probabilities and stuff, might throw a few people off, but basically what I'm trying to say is, as long as you have a valid trade set up in front of you, you need to accept that there's a win rate attached to that. Chance that it wins, chance that it loses. Get comfortable with that, and then accept the fact that you've not done anything wrong if you hit stop losses. You've not done anything wrong if you hit 5 stop losses in a row. You've accepted that there's a chance that that happens, and the longer you trade and the more that you trade, the more likely it is to happen, because you've now got a larger sample size to go off of, okay? So, I know that was a little bit lengthy, but it's super, super important if you want to understand how trading works and how to actually be a professional trader, okay? So this episode is going to be super crucial to demonstrate all of that which I've just said. So, without further ado, let's get into the trades, okay? So, I didn't make Sniper Sundays last weekend, so I'm going to cover 2 weeks worth here. So first of all, let's go over week 1. First trade, we had a pound US dollar day trade where we hit a stop loss. Okay, so let's go over this. This was on the 24th of Feb, pound USD. So let's load it up. So we go pound USD, 24th of Feb, and this was at about 9:30. There we go. Wait for it to load. Hello. There we go. Okay. Let's planet line on that. So this was a day trade. So we're looking at the 15-minute here. Okay. So let's load up the 15-minute. Find our little bookmark. And what were we looking at here? Okay. So pretty simply, we had these highs and these lows. Oh, didn't mean that. Those highs there, these lows here, which kept the pound in this sort of channel range there, okay? What happened was we had a breakout, retest, breakout again, okay? So if I load up the trade here, so I can show you guys, there we go. Oh, here it is on the 15-minute. So this zone here is this set of highs. Okay, I'll make it green just so it's a perfect match for match. You can get rid of that. So we had these highs which broke out, and this gave us our break of structure, just like that. So this, let me be clearer here. This was our break of structure, like that. This ABC formed our substructure. So when price broke out of these highs, this is what gave us our break of substructure. Okay, this is using our John Wick strategy that we love. Okay, so we had breakout, substructure, break of substructure. Now what we go off of here, this low to this high, we take the fib. Price comes down, shows us some confirmation, and we take a long to go higher. Add our 3 TP levels up here, like this. So like I mentioned, multiple ways you can do this. You can either take a full TP1 there, for 100% basically and just trade it like this, which would have gave you a 3.26% trade. Or you can do 50% here, 25% there, 25% there. You could also do 50% there, 50% there. Okay, plenty of different ways which work for you. Things to consider with this is the higher RR you aim for. So here we're aiming for a 5.8. That's going to have a lower win rate compared to something like this where we're only aiming for a 3.25. This is going to have a much higher win rate, but you're making less when that does happen. So things to consider, it's kind of different person to person. Every trader's got their own personality. So it's something to consider for you in your trading plan. You can see here we got quite unlucky with this one. It was a valid setup. We had the rejections. Price swept these lows, took us out, and then did go on to hit TP1 and TP2 afterwards. So yeah, that was the first trade, stop loss hit. Like I mentioned to you at the start, it was a valid setup, so I don't regret anything. It was a valid trade. I took it. I know that it's got a win rate attached to it, and this just happened to be one of those occurrences where a stop loss got hit. Absolutely fine. So next trade, Euro USD. This was an intraday trade where we had a stop loss hit. Let's load that up. And this was the 1 minute time frame, 25th at about 9:30 again. Let's go 1 minute, 25th of Feb, about 9:30 again. Wait for this to present itself. I'm just going to find it. Been slow today. Let's go back. I think it's because it's not loaded up here yet. 24th of February. We're on the right day. Just need it to present itself. Load up our EMAs. Yeah, my TradingView server is really slow, so apologies for that, guys. It's normally tip top. Don't know what the hell is going on. Load up the 50 EMA. I'll try that again. We want the 25th at about 9:30. Go to. There we go. Right, cool. So, what we had here. Let's check out the Asian session. So this is an intraday trade. Okay, so this is my intraday strategy. What we do, we wait to see what happens with London Open and how that reacts with the Asian session, for example. So what we saw with this Asian session here was that price swept the highs, then it swept the lows, and then it started pushing higher, like this. So we're taking out highs, right? So what's happening is we had price now forming from this point here where it swept the low, higher high, higher 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 low. Okay, so our strategy is basically look at the direction the price is going to move throughout London, which in this example was higher highs and higher lows, and we look to trade price on the continuation of that wave using the EMA, fib levels, and Elliott wave principles. Okay, so here on the 1 minute time frame, if I just do a little mark, I'm going to hop on a 1 minute now. It's going to take me back, go back to it. It's my own fault for doing this 2 weeks later rather than in the same week. So this is the price I pay. So let's go back on a 1 minute. And let's take a look at the story here. Okay, so about 9:38. You can see here on the 1 minute, we have that Asian low swept, and price is now making higher highs and higher lows higher. Okay, what we were looking for is high, 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 low, high, 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 low, high, 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 low, high, high. We wanted this to be another high low to push higher, just like that. So we had the EMA acting as support multiple times. We've got proper Elliott wave structure. We've got a valid bias, a bullish bias, which was correct. We were looking for price to come down, use this as support once again. Stops beneath the low. TPs, just 2 TPs on my intraday. I like to keep it a little bit shorter. And yeah, unfortunately this got swept lower and then price did continue up high. And that was the loss that we took there. Valid setup, once again. I have no regrets in taking that trade. It was valid. We had all the entry criteria. It just so happens that our outcome was negative. It doesn't mean we did anything wrong. Okay, that's just part of trading. Next up, I believe we have a pound day trade. Another stop loss hit. This is why I'm telling you this is such a crucial episode. Okay, as a beginner, when you start taking these losses, you feel like it's the end of the world. You think you're doing something wrong. All of that stuff. This is part of trading. If you look at the last 8 episodes, you'll see how good of a trader I am. This isn't week in, week out. This is just a rough period in the markets. It's not that I've done anything wrong. It's not that the markets haven't been behaving properly. They're not supposed to be behaving anyway. It's all just a wagered game of probability outcomes. This just happens to be one of those negative probability outcomes. Okay? Understand that. React emotionless to this. This is why we only risk 1% per trade, so that you don't have any emotion attached to those losses. Who the fuck cares about losing 1% of their balance? It's nothing. The reason a lot of beginner traders nowadays get so attached to losses is because they're completely fooled by funded accounts. If you've got a 100k funded account and you can only lose 10% of it, you should not be risking 1% of that account balance, because what you're doing there is risking 10% per trade. So then, if you lose 5 trades in a row and you've risked 10% per trade, of course you're going to start flapping, because you've now lost 50% of your account. This whole pipe dream of funded accounts and paying a few £100 and getting 100k is a pipe dream, okay? Risk 1% of the balance in the passing phase, but once you get onto that live account, you don't have a 100k account. You have a 10k account. Use 1% of 10k, and trust me, your losing periods will be so much easier to get through. And that is the proper way to trade, okay? Don't tell the prop firms I said that, because they won't be happy, because you'll blow a lot less of them and you'll actually start making money on them. Okay, so let's get into this trade. Pound US dollar, short. This was on the February 25th at about 20 past 12. So let's load that up. This was on the 1 hour time frame. Let's go 1 hour. Let's go Feb 25th. We're on it, and let's go at about 12, like that. So I see I'm on a 1 hour, so this is probably my John Wick. And we're looking for shorts, okay? So what we had here, trend line, like this. Line it up a bit better to the lows, so you can hear this. You see this trend line here, okay? 1 low, 2 low, 3 lows. We've lined that up through them, just like that. And what we've noticed is that prices broke out of this trend line here, okay? Break of structure. Now, this is on the 1 hour time frame. So as we've broken out of a 1 hour trade, I want to hop down on the preceding time frame beneath, which for me is the 15-minute. Okay, the 30-minute is kind of like not really a key time frame. It's sort of like double the 15 or half the 1 hour. So for me, if I'm looking at a 1 hour breakout, I want to look at substructure on the 15-minute. Okay, so prices broke out of that 1 hour range. Okay, now we have this substructure form in the form of these lows, like that. You can even have it here, like that. So now that this level breaks, okay, you see that close beneath there. Let me double check with this. So we had break of structure, yeah, like I said, that closed beneath. And rather than looking for the immediate pullback there, I caught this one a bit later. I waited for this to change character first. Okay, that's what I did. Okay, so in truth, what you could have done is took your fib from this high to this low there, just like that. Waited for that to pull back, catch a short from the fibs, stops couple pips above the high, TP1, TP2, TP3, yada yada yada. You would have got your TP1 there. That's not what I did. Okay, that would have worked, but the reason I didn't is because this is a key level. Okay, and at that point, where this is the change of character, what I would have preferred to see is this whole wave get retested from there instead. Okay, because if we look on a 1 hour, look on a 4 hour, we had a huge balanced price range that needed refilling. So I thought I was being more cautious by waiting for a bigger pullback before trading lower. Okay. However, hindsight's a bitch. If I did actually take that original impulsive trade on the level that had just broken the low, take that, I would have made some money. But that's not the way it went. I waited for this change of character and then a full pullback on this wave. What happened? Significant high down to the significant low. I waited here for price to retrace that whole move up, catch a sell, stops above the high, TPs down here, for example. Okay, would have had my third TP on that because it's a day trade. What happened? Fortunately, I got stopped out. Okay, price came back up, liquidated those highs, and then dumped off all the way down there. Okay, so my idea was right. Okay, like I said, it was just a tricky couple of weeks in the markets. Okay, you can see the idea was bang on. We did have an opportunity there which would have made money, but I chose to take the whole move instead. We got swept out. Okay, end of the month, Wednesday, got swept out. Price did actually come all the way back down here in this direction. So sometimes it just happens like that. But there you go. That was another 1%, and we account for that. Next up, I've got some intraday trades on GU. So let's take a look at those. This was February 27th at about 10:30. And this was on the 5-minute time frame. Okay, so let's take a look at that. 5 minute, February 27th at about 10:30. I just want to point out there, look at this losing streak, okay? So from last week, 1, 2, 3, 4, 5. 5 trades in a row that I've lost. Minus 5% in a row, okay? I did not flinch when more trades came up. And that's how you need to be. Something that you will deal with as a beginner is you'll get that trigger finger fright, okay? When you lose a few trades in a row and you start getting scared to place more trades. As long as your trade setup is valid, you take it, okay? Because you think that you're being more risk off by trading less, but not only are you hiding yourself from further losses, you're hiding yourself from the wins that are going to make back those losses. So you just have to let the trades play out. It will, as long as you've got a profitable strategy, the wins make up for the losses. So the biggest thing in terms of taking losses as a beginner is you need to make sure that your execution is correct, and then if so, just keep trading through it. Okay, as long as your risk management is fine alongside that, you've got nothing to worry about. Like I said before, the biggest thing that I see is people have this problem because they're risking too much and they're being tricked by funded accounts into risking too much. You think you're risking 1% per trade, mate? You're not. You're risking 10% because you can only lose 10% of that balance. Trade proper and this won't be a problem for you. Okay, so bear that in mind. Your wins make back your losses. Okay, 5% down. I only need 2 wins to make it back. I ain't scared. What are you scared for? Okay, when you're not trading and when you're taking yourself out of the market, your portfolio needs to be exposed to risk in order to also be exposed to reward. Okay, bear that in mind. So next trade up, pound US dollar intraday trade. Let's check it out. So this was half 10 on the 27th, 5-minute time frame. 27th, about half 10. Let's check it out. So what do we do? Check the Asian session. So we can see here that we actually had quite a directional Asian session, okay? And when we have a directional Asian session, I don't look for the sweep. The only time I look for that Asian session sweep, okay, is when we have one that's low volume. So something like under 25 pips is quite ideal. And when you have one that prints a clear high, prints a clear low, and sort of consolidates like that, and it makes a high and a low that can clearly be swept for liquidity. When you have an Asian session like this, there's nothing to sweep because this isn't really a high and it's got a direction to it. So with that, I basically just disregard the Asian session there, and then I just go off my usual trend continuation strategy. Okay, we can see that we've got price making higher highs and high lows like this. Ah, shit, did not mean to open up the help. So what we did, 5-minute time frame, is we had 2 supports from that EMA, higher high, higher low structure, just like that. And our trade was from this significant low to this significant high. Let me take my third TP off. Something like that, okay. I've got multiple EMA support, higher highs, high low, fib from the last significant low to the last significant high, wait for a pullback, get some candlestick rejections, and then I'm long, okay. Did I enter this from the 71 or did I enter this from the 78.6? Let's check. I entered this from the 71. You could have been a bit more patient and got an entry from the 78.6 there, just like that. And then you would have had a 4.9R trade. I was a bit premature and I only got a 3.3. However, nonetheless, that is a beautiful trade. Okay, exactly the same setup as the other trades that I lost using this strategy. Okay, higher highs, high lows, EMA support to reinforce it, candlestick rejections off the EMA, off the fib, and entering from key fib levels where you can see rejection from levels. Perfect textbook trade. And this one we made 2.33R on the TP1 and about 3.22R on the TP2. Total, we made 2.78%. Okay, so notice I've just lost 5 trades in a row. If I just make 2 of these, I'm in profit from the last 7 trades, even though I lost fucking 5 of them. Okay, so don't be scared about losing trades. You just need to win and make it back. Simple. Next up, we've got Euro USD intraday. Similar trade idea at the same time, I believe. So this is essentially risking 2% per idea, but I don't care because it's pound and the euro, and I like trading them side by side. I don't mind 2% risk per trade. Okay, it's still pretty small. Okay, sometimes, and especially now, the euro and the pound are being quite divergent. They're not really acting the same as they usually do. So I'm absolutely fine with this at the moment. But this one, Euro USD, same time, 27th, half 10. Let's look it up. Euro USD, load it up. 27th out of 10, let's go here. So you can see, same principle, okay? Asian session was directional, so we're not looking for it to get swept. We have price coming up, making higher highs, high lows, showing us nice Elliott wave structure. What did we do? We noticed we had multiple EMA rejections, or support should I say, higher high, high low logic. We take the fib from the last significant low. Was it that one? Yeah, that one. Last significant low to the last significant high up there. Entry from the 71% fib. This one was perfect, okay? Didn't actually hit the 78.6, so we was right to go for the 71. Stopped just beneath that low. TP1 and TP2 target was up here. So now, notice what I said earlier about you can use a full TP1 target, and this has been performing really well. Since the markets are so choppy, something like this is a much more surefire trade when the markets are bouncing constantly between each other, retracing, not really expanding as much as they usually do. But for the sake of the track record of Sniper Sundays, where I've been using the TP1, TP2 structure, I've just said that this was a 50% TP at TP1. But you know, other members in the group took a full 2.4% trade there, and they made back, okay? If you would have took that trade in full and that trade in full, you've already made back 4.6% of that last 5% losing streak, okay? So you're basically back at break even from just 2 trades. So that should help you when you're collecting the data on your trades, get through your losing streaks a lot easier. Especially when you've got very healthy risk to reward ratios like this. It only takes a couple trades to make it back. Just don't be so scared about it, okay? So for the sake of this, I've said we've just hit TP1, we've took 50% out, and then the other 50% after this hit our stop loss at break even. So for the whole Sniper Sundays track record, I'm only saying that I've made 1.15% there, okay? Next up, okay, I'll show you what we did here, is we actually stacked this, okay? So here was our first trade, just like that, okay? After this leg hit, I'm still in that first trade for the second 50%, but then what I'm looking for is this to keep continuing. Again, it's a valid trade, it's within our trading range. So I've taken it from this low to this high, up here, price came up, looking for it to come back down to the EMA and the fib. I did catch an entry, I think I got it from the 78.6 on this second time round on EU. Let me just check. So this was a stack, yeah, I got it from the 78.6. So I took a stack trade on EU, like that. Unfortunately, and when I say unfortunate, I really mean unfortunate, we got wicked out there, but price would have came up to hit that TP1 if not for that. Like I said, it's all probabilities. We accepted the risk of that when we placed the trade. You can see that the idea was right, but that's not how trading works. Just because your idea was right doesn't mean you've made money. So this is why it's important to view trading as probabilities, because you can be right and still take a stop loss. Okay, so detach being right from the outcome of a TP or an SL. Okay, so this one we stacked and we ended up losing 1% on that second trade. So I've got that there, SL hit on EU minus 1%. We did the same on GU, but GU wasn't as unlucky. So let me load up GU there to show you. 5 minute again, 27th out of 10. Where's that going to be there? So our first trade was this one, low to the high, entry from there, stops beneath the low, TP2, beautiful full TP2 hit. Then again, what did we do? This is still a valid uptrend, okay? So we took the low to the high, got the fib from that, and then what we did, we entered on this 78.6, stops beneath the low, TPs at the highs, okay? And then when price ran up all this way, what we did is we set our stops to break even, and then unfortunately price came down and stopped us out at break even. Okay, so by moving our stop loss to our entry point as price played out in our direction, we managed to safeguard a loss, and we just closed out at break even, which is 0%. Okay, this would have fully reversed and hit stop loss, so that was a good risk management protocol in place there, and we managed from GU to just make that full TP2 and then a BE on the second trade afterwards. So this was a really successful day for us, really needed after that losing streak. So we made 2.78% on GU, we made 1.15% on EU, but then we lost 1% on the second EU position. So all in all, we made about 3% back on that day using TP1 and TP2 structure. If we just used TP1 structure, we would have actually made 4.6%. 3.6%, because obviously TP1, and then that got an SL hit. Okay, so last but not least, last trade of the week was a GU intraday trade as well. Let me load that one up for you. This was on the 28th, GU, and this was a 2-minute trade. So let's load that up. 28th, 9:30. And we're trading on the 2-minute time frame. So, first things first, let's analyze what happened in the Asian session. You can see in the Asian session exactly what I described to you earlier, where you have a high and a low. That was the low. Get printed. Now this is giving you a high and a low that has liquidity on either side. So what happened? The lows got swept, change of character higher, and then price trades higher and takes out the bottom and then takes out the top. Just like that. So that gives us a bias for where price is going to go. We've swept these lows, change character higher, and now we're looking for the London to be bullish. Okay, so we had the correct bias. On our 2-minute time frame, you can see that price is making higher highs and higher lows, just like this. Perfect Elliott wave structure. We've also got the EMA being used as support as we're pushing higher. So, at about 9:30, when we had this low and this high, what we were looking for was the fib from that low to that high to come back, use this as support, and keep pushing higher to rally the move. Again, unfortunately, that wasn't the case this time, and we got stopped out. We accepted the risk when we entered the trade, and it didn't play out for us, and we lost 1%. Okay, not the end of the world. Okay, so that weekly total there from all those trades I've just shown you, even though it felt like a catastrophe at the start, where we took 3 trades in a row losing and then lost 2 more at the end of the week, we only lost 1%, guys. Okay, so I know when you're taking a lot of stop losses, it can be mentally draining as a beginner. Look at your numbers, and that's all you need to care about. Why are you so upset about minus 1%? Okay, detach the emotion from your outcomes, and you'll start to realize what a fucking pussy you are when you add all that up and you realize I only lost 1%, but you were crying about all these stop losses, weren't you? I bet you were. Okay, detach yourself from them and just look at the numbers, and you'll be absolutely fine. Okay, let's get into week 2. So that was last week's Sniper Sunday that I should have done, guys. I lost 1%. I'm sorry. Next up, we made it back within the next 1 trade. Okay, back in profit. So let's load that up. So this is a big swing trade that we've been holding, and it finally hit TP3. It is this trade here. Okay, so I'll draw it out from the start. So we had, let's get rid of the EMAs. We had this bearish channel like this, where you've got these highs and these lows. You're being bound by this trend line here. Okay, that trend line broke higher. So what do we call that? Well, the John Wick strategy says it's a breaker structure. And then after that breaker structure, we want to wait for some form of substructure to form. Okay, You can't call any of this substructure when it's pushing higher, so we waited for a correction. What did we have? We had a perfect A, B, C correction wave following Elliott wave principles. Okay, we mark that out from these highs as well. So that's your corrective structure there. This then broke out higher as well. So after this broke out higher, let me remove the arrow. This is now a break of substructure, and this gives us a valid reason to take a trade. So we look for this significant low and this significant high from that breakout wave, plot our Fibonacci tool, and we look to take an entry from the 71% fib. We caught our entry perfectly there, just like that, on the button. This is why we call it the John Wick strategy. Okay, speaks for itself, just like that. Stops beneath the low. We had TP1, 2, and 3 all the way up here, and on the last Monday we hit our TP3 just like that up there, and that made us a nice 4.4 risk to reward. So you can see that I've tracked that there, 4.4 risk to reward. We took 50% of our profits out here, we took 25% of our profits out here, and then the last 25% runner we took out there. So of that 4.4 risk to reward, we cashed out 1.1% in the bank. Okay, just like that. Next up, we've got a pound US dollar intraday trade. Let's have a look at that one. Let's find it. Is this it, or is that the one we've just gone over? Let me check the dates. 28th, no, we need the 3rd of March for Monday. Yeah, there we go. So that was our TP3 hit on there, as we called it out. Next up, March the 5th, we've got a GU intraday trade at about 10 AM. So let's check that out. 2-minute time frame. March the 5th at about 10 AM. Let's go to that. And we'll load up our Asian session range. What we noticed, we made a high, we made a low, we swept the high, but then we managed to break out and keep making higher highs and higher lows. Okay, so in this scenario, we look for that continuation higher where we've retested those previous Asian highs as new support and then formed higher highs and higher lows afterwards. So in that circumstance, we're looking for price to remain bullish. We look at our EMAs, and on the 2-minute time frame, we can see that the EMA has been used as support multiple times, and we're making higher highs and higher lows to the upside. Now, price was very bullish on this day, and I remember it quite clearly, so I didn't really want to take the fib from like one of these lows to one of those highs, which would have proved right. Okay, so I took it from this low down here, pretty sure. Let me check. Yeah, I took it from there, that low to that high, and I was actually looking to enter from the 61.8 fib, like here, with my stops beneath the 78.6 instead of beneath the low, targeting my usual TP1, TP2 there. Again, didn't happen. Okay, didn't happen. I got stopped out and I lost 1%. Okay, boo-hoo. There you go, lost 1%. You can see that the overall idea was right. We corrected a little bit, but then we kept pushing higher for the day. I just got stopped out. I accepted the probability when I entered the trade, and it just didn't play out for me this time. That's fine. Next up, bit of a spoiler there. Next up, Euro USD, again, stop loss hit. Here we are. Euro USD, 10 AM, 1-minute time frame, same day. Let's check it out. One minute. March the 5th at about 10 AM as well. Let's go back to there. So this was the 1 minute time frame on the 100 EMA, sorry, so it would have been exactly the same as the 2 minute time frame on the 50. So I'll show you it like that. Same day as the trade that we just had previously, where you see we had an Asian session, like we like to see, where it prints a high and a low, broke the high, retested the previous Asian highs as support, and then broke higher, making higher highs and high lows, like we saw on the pound, okay? So same idea, we were looking for that to print another, let's line that properly, looking for that to print another leg higher. Unfortunately it didn't, and our stop loss was hit, okay? That was our entry. It was looking nice, but unfortunately we got stopped out, just like that, okay? It happens. So again, minus 1%. Next up, another Euro USD intraday, minus 1%. Let's check that one out. I believe that was here on a 2 minute, and that was on the 5th at about 12. Time frame was on 2 minute. Right, okay, so now that we broke this higher high, high low structure, and we're starting to use the EMA as resistance once again, now we're making lower lows and lower highs. And that's one instance of resistance. Here we broke the low, made another low, lower high, lower low. So what we were looking for is this now to continue lower, like that. Okay, fib from the high to the low, and again, this just shows you how choppy price was. Like if you've watched the last 8 Sniper Sundays, you'll see we never normally take this many losses. Okay, so it's all factored in. Whenever anything has a probability attached to it, there's also then inherent probabilities of if this event happens, where this amount of things happen in this amount of times in a row. It's all factored in. The best way to think about it for me, if you're in England or if you just follow football at all, the chances of Leicester City winning the Premier League when they did was absolutely near zero small. And they did it, okay? There's plenty of instances in science and in nature where things just basically shouldn't happen because their probabilities are near zero. But they do. And the reason they do is because that probability is still a number. So it has a chance of happening. And you'd be surprised how chances are distributing, okay? Crazy things happen every single day. So this isn't anything abnormal compared to some of the shit that goes on in the world, okay? So this was a valid trade. Unfortunately, we just got stopped out. And that's just how trading goes sometimes, okay? Didn't cry about it. I've took 3 losses in a row again. Okay, boo-hoo. And now you see I've just taken over 2 more. Okay, so US dollar Swiss, I'll go over them. Let me go over it from scratch. Dollar Swiss, this was a day trade. And this one kind of shows you how choppy the dollar was for us. So let's load that up. Dollar Swiss, we were looking at that recent breakout. So what's been happening on the dollar Swiss, okay, I've been really excited to see this sell off, okay, is we've had this trend line. 1 low, 2 low, 3 lows, okay, break of structure, clear as day. Now, we have had this corrective structure form, okay, in the form of this corrective channel. That broke out as well, so that's a break of substructure. Then we had this low form here, which was our third break of structure, as we call it. This trade was valid, taking this high to this low there. You could have caught that as a John Wick sell, just like that, taking it all the way down here. Again, the reason I didn't take that, which would have been a 5.9, is because I was really looking to see this high get taken. I was looking for a level like this for a sell like that. Unfortunately, I didn't get it. And again, that is just how trading goes sometimes. You win some, you lose some, and some you don't even get in the first place. After we've had this third break of structure, I don't take any more sells. I wait for a correction. And that's what we had here, okay? This correction higher, just like that. That was a correction higher. And now we've got a fresh break of structure. This was our substructural low. Now this closed beneath it. That's our break of substructure. So this trade on dollar Swiss was taking this high to this low to play on this pullback up to one of our key fibs to then sell off to the downside. So our sell, like this, okay, was selling from this fib level, stops just above the high, TPs down here. And again, a very rough patch in the markets. Like I said, the idea was right, the trade just didn't happen, okay? And that's just how trading goes sometimes. Don't get pissed about it, don't get annoyed, it's no one's fault. That's just the nature of the markets, okay? They can be very tricky sometimes. The key is to just stay emotionless from the outcome, okay? Don't let shit like that bother you, otherwise it's going to throw off your game, okay? And then, last but not least, because it's obviously equal weighted to the rest, is this pound US dollar intraday trade that we ended the week on. Yet again, another loss. Okay, pound US dollar 2 minute on the 6th of March. So let's load that one up. Pound US dollar, 2 minute time frame, 6th of March at about 11. Like that. We were looking to go short. What happened? We had our Asian session, printed a high, printed a low, came up and swept it. People that trade the Asian range sweep had a really bad day here. Like, that was just megaphoning all around those highs. So imagine you were trying to trade that sweep, okay? You've got a short there, stopped out, and then you're like, oh, it swept again. Let me get back in. And then it swept him out again. Like that was a rough day. Like, it's been a lot of the traders that I can vouch for as actual real traders. Everyone says that it's been a rough few weeks. There's been a lot going on in the markets with Trump talking about Europe and Russia and Ukraine and everything. So the markets have been a little crazy. I just like to trade through it and let the edge play out. Sometimes a bit of volatility is good for you. Sometimes it's bad for you. So as long as you're only risking a small amount per trade, you need exposure in order to get reward, okay? So with these highs being swept finally and looking to sell to the downside, we took those Asian lows. We then came up and retested them as resistance and made another break of structure to the downside. So it was looking like we're going to sell lower, okay? So the trade that we took, pretty sure it was from these highs to these lows. We can see that we have resistance multiple times. We were looking for this to come up after this already sold off to retest and go back down. A position something like this. Stops above the high, TPs down to the low. Again, unfortunately didn't happen and we hit a stop loss. So we finished the week with another loss. Where the hell is my note gone? Have I closed off my note? Shit, let me find that for 2 seconds. And we're back. Okay, so yeah, that was the final trade of the week, pound US dollar. We have another run of losses. 1, 2, 3, 4, 5. Yeah, five more losses in a row to end the week. So this recent last week was crazy. 5 losses in a row, guys. Mental. And the week before, we took a lot of stop losses as well. However, in this past 2 weeks, the first one was minus 1%, and the second one was only minus 3.9%. It's really not the end of the world, guys. 3.9%, 1.1%. We've lost 5% in 2 weeks. The sky is not falling down. That is a very comfortable amount to be able to lose and not panic frantically over, okay? Sniper Sundays running total, we're still up 14.4%, about for the year, that is, okay? So 2 months have closed out. We've made an average of 7% profit per month. That is a fantastic record, okay? You take that, extrapolate that for the year, 7% a month, 12 months of the year, you're making 84% a year, okay? Beats fucking most hedge funds, okay? Put it that way. So understand it has been a rough couple of weeks in the markets. Hell, it's been a rough probably 5-6 weeks. We've lost quite a lot in a row now. It's never been too major, okay, compared to this last week, which was minus 3.9%. Probably the worst week that we've done on Sniper Sundays. But 2 wins and you're back in profit. There is no need to panic about that, okay? This is really important if you want to become a professional trader, is you need to stop expecting to win all the time, every single week. And the most important aspect is learning how to navigate through losses, okay? Don't get that trigger finger fright where you're now scared to place more trades, because you need to place more trades in order to win the trades, in order to make it back, okay? Every single trader has losing streaks, okay? It's all factored in your win rate. It's not alien. This is not the first losing streak I've had, and it won't be the last losing streak I had. So it's really important that you understand how to navigate through it mentally. That's what matters, okay? The biggest thing that I see is people getting a live funded account and risking 1% of the balance. But you can only lose 10% of the balance. So with that setup, you're risking 10% per trade, which is far too much, okay? Please take my non-financial advice on that, which is purely educational, of course. But yeah, that does it for the week, for the past 2 weeks, should I say. Running total on Sniper Sundays is still 14.4% up. So, like I said, an average of about 7% a month, which is crazy. It's really good, okay? So, I really hope you appreciate this week's Sniper Sundays. It's been a lot longer than usual, but obviously you've had the breakdown of more trades within it, and you've had some really valuable advice when it comes to losing streaks and handling losses in trading, which is more important than handling your winners, okay? So, thanks for everyone that's made it this far. If you do want to join the VIP group, it's currently just £1 a day, okay? £365 a year, £1 a day. Think about what you spend £1 a day on, okay? You probably buy Costa or Starbucks like £5 a day, which is just draining your bank. This is literally teaching you how to learn a high income skill. And if you can make 7% a year, 7% a month on average, okay, like I've just shown you for the past 9 episodes, that is a super, super high income skill to have for just £1 a day, okay? So if you do want to join the VIP group, if you're not already a member, drop me a message and I'll help you get inside, okay? I don't like taking anyone on, okay? I do want to see that you've had some form of trading experience before, whether it's just watching these videos and understanding them and getting along with them and wanting to learn, that's absolutely fine. But it is quite an exclusive group. I don't want to see any messes in there. We don't just accept anyone. So do drop me a message if you're serious about joining. But yeah, I'm going to be live Monday, Wednesday, Friday. Okay, so for everyone watching this on the Sunday when it's dropped, I'll see you tomorrow. And if not, I'll see you when I see you. But honestly, thank you so much, guys, for making it this far. Please drop a like on the video because it really helps me out. And I'll see you next time.